Debt is one of the most useful instruments available to billionaires, who frequently use complex financial methods to preserve and increase their riches. They deliberately use debt to access liquidity, reduce tax obligations, and make profitable investments rather than seeing it as a burden. Here are 7 key points that illustrate how billionaires use debt to stay rich. Number 7. Tax avoidance. Utilizing the complexities of tax law to optimize their financial gains, billionaires frequently use debt as a clever form of tax avoidance. They can obtain substantial liquidity without incurring capital gains taxes that would result from selling such assets by taking out loans against assets that are increasing in value, such as stocks, real estate, or business holdings. For example, a billionaire who has a $1 billion stock portfolio that has increased in value over time may face a large tax bill from capital gains taxes, which in some countries can reach 20% if they sell even a portion of their shares. Instead, investors can get cash to finance fresh investments or personal expenses while delaying taxes indefinitely by taking out a loan secured by these assets. This strategy not only protects their wealth, but also permits tax-free growth of their investments. Additionally, the interest paid on these loans is frequently tax-deductible, which lowers their total tax obligation even more. For instance, they can reduce their tax burden by deducting the interest payments from their taxable income if they borrow $100 million at a 4% interest rate. By using debt strategically, billionaires are able to preserve their financial positions and benefit from liquidity without having to deal with the immediate financial fallout that comes with selling assets. Number 6. Leveraging assets. Leveraging assets is a key component of billionaires' financial plans since it enables them to optimize their wealth potential without having to liquidate important investments. They can borrow against their investment portfolios, which include stocks and bonds, through securities-based lending, all the while keeping ownership of the assets. This approach is especially beneficial since it enables them to access funds for a variety of uses, including business operations, new investments, and personal expenses, without having to liquidate a piece of their portfolio during potentially bad market conditions. Generally speaking, the loans have lower interest rates than unsecured loans because they are backed by the value of the collateralized assets. A billionaire, for instance, may be able to borrow up to 70% of their $500 million diversified investment portfolio at an interest rate that is far lower than what they would pay for an unsecured loan. This allows them to keep their current investment positions while investing in new ventures, like buying real estate or launching businesses. Over time, billionaires can greatly improve their overall financial situation and generate more wealth by carefully controlling this leverage and making sure that the returns on new investments outweigh the cost of borrowing. Number 5. Investing in income-generating assets. In order to invest in assets that generate income and maintain and increase their wealth over time, billionaires usually intentionally use debt. They can improve their cash flow and overall financial results by taking out loans to buy real estate or stock in successful companies. Take a billionaire, for example, who borrows $10 million at a 4% interest rate to buy a business property that brings in $1 million a year in rental income. The net income is still high after deducting debt service charges and other property management costs, providing a return on investment that is significantly higher than the cost of borrowing. With this approach, companies may take advantage of both immediate cash flow and possible long-term appreciation, and they can manage greater assets than they could with just cash purchases. Additionally, the money made from these assets can be reinvested or utilized to settle debt, which accelerates the buildup of wealth through a compounding effect. They can reduce the risks connected with individual investments while optimizing overall returns by employing borrowed cash to diversify across several income-generating endeavors such as commercial real estate or multifamily housing developments. Number 4. Cash flow flexibility. The exceptional cash flow flexibility that debt offers billionaires is essential for efficient financial management in both their personal and corporate lives. They can keep liquidity while still fulfilling financial obligations or taking advantage of new opportunities when they present themselves by choosing debt over selling investments or using personal funds for costs. This adaptability is especially helpful in times of market turbulence or economic downturn, when having cash on hand is crucial for overcoming obstacles and seizing opportunities. For instance, having access to borrowed money enables a billionaire to take swift action without jeopardizing the integrity of their current investment portfolio in the event that they encounter unforeseen costs, such as emergency repairs or legal fees, or spot a chance to purchase assets at a discount during a market downturn. This strategy also allows them to participate in possibilities that are time-sensitive, such distressed properties or creative businesses that require quick funding, without having to sell off other important assets at possibly unfavorable rates. Billionaires make sure they have the money on hand for both anticipated and unforeseen expenses by carefully controlling debt levels and payback plans in accordance with cash flow requirements and market conditions. Number 3. Strategic business growth. Leveraging debt is essential for advancing strategic business growth and expansion plans within their companies. As many billionaires understand, they can finance a range of expansion plans, including breaking into new markets, creating cutting-edge products, or purchasing complementary companies that improve their current operations by taking out loans at advantageous interest rates. With this strategy, they may expand rapidly and take advantage of growth prospects that may not be possible with just organic growth. A loan could supply the required funds for R&D activities without reducing ownership through equity financing or drawing from current cash reserves. For example, if a billionaire owns a successful tech company that wants to expand its product line into new markets, possibly through international expansion. The main benefit here is that overall profitability rises dramatically when companies expand effectively with borrowed money, particularly when the return on investment outpaces the cost of debt. By facilitating quick adjustment to shifting market conditions, this not only increases the billionaire's fortune, but also fortifies their position and competitive edge within their sector. Number 2. Utilizing low interest rates. Billionaires are especially adept at using low interest rates to their advantage by financing large purchases rather than making cash payments in full. This approach reduces the total cost of borrowing money, while allowing them to save funds for investments with higher returns. Billionaires may take advantage of advantageous lending conditions to finance acquisitions like luxury real estate or high-potential startups at a lower cost than historical averages during times when interest rates are historically low, frequently after economic downturns or central bank interventions. A billionaire, for instance, can maintain liquidity for other investments or expenses while generating substantial profit margins over time if they obtain a loan at 3% interest to buy an asset that is anticipated to yield an 8% return annually, such as rental income from commercial properties. They also optimize their financial plans for optimum profit and build wealth through sensible financial management techniques by strategically scheduling their borrowing based on economic forecasts and interest rate patterns, such as predicting future rate hikes. To lower monthly payments or free up more cash flow for investing in higher-yielding assets, they might also refinance current obligations during times of low interest rates. Number 1. Estate planning and wealth transfer. Billionaires frequently use complex estate planning techniques that use debt as a component of asset transfer mechanisms intended to efficiently maintain and increase family wealth over several generations. One common tactic is the idea of buy, borrow, and die, in which people buy assets that appreciate in value such as stocks or real estate and then borrow against them while they are still alive for investments or personal costs, postponing paying taxes on the gains until they pass away. Capital gains taxes that would have been incurred if the assets had been sold during the individual's lifetime are essentially eliminated when these assets are passed down to heirs with a step-up basis, a tax provision that resets the asset's value for tax purposes. Compared to traditional inheritance methods, where taxes would be applied based on original purchase prices, plus any appreciation over time before sale occurs, post-inheritance transfer process completion, which could put heirs into high tax brackets. This approach not only preserves wealth, but also minimizes tax liabilities for heirs who inherit these assets because they benefit from an increased basis reflecting current market value rather than historical purchase price. Millionaires are able to guarantee that family wealth is preserved while continuing its growth trajectory over time through astute reinvestment decisions made along each generation's path forward. Thanks to this strategic planning methodology, combined with careful asset management practices throughout life stages leading up to death, including charitable giving strategies. By employing these sophisticated debt use tactics, billionaires manage intricate financial environments with deft accuracy and foresight, not only maintaining, but frequently increasing their fortune. Thanks for watching our video, and don't forget to subscribe.